Ever feel like you're missing out on those like insider stock tips? The ones that like everyone else seems to be cashing in on? Well, today we're ditching the secret handshake and like diving into a strategy that's all about recognizing opportunity. We're talking about dividend stocks.
And more specifically, we're going to zero in on two companies that are really turning heads with their dividend yields, Nike and Verizon.
Exactly. I mean, we're talking about big household names here, but both of them are flashing some intriguing signals that might make them worth a second look, right?
Right.
So what's our mission for this deep dive? We're going to unpack why these companies are standing out from the crowd and what factors might influence how they perform down the road. What should you be paying attention to?
Well, remember, a high dividend yield, it's kind of like a bright, shiny object. It catches your eye, but it doesn't necessarily tell the whole story. We need to understand the context, the company's overall strategy, and like all the different forces at play in their industries. That's what'll help us separate a fleeting opportunity from a potentially lucrative long-term play.
Okay, so let's lace up those investor sneakers and dive into Nike first. Now, their stock has taken a little bit of a tumble recently, down 54% from its peak.
Yeah.
That might sound kind of scary to some people, but this article suggests that dip could actually be a buying opportunity for investors, especially with that dividend yield sitting at 1.83%. To put that in perspective, that's the highest it's been since 2009. What do you make of that?
It's definitely fascinating, right? I think to understand why this is significant, we have to remember that stock prices often move in anticipation of a company's future performance, not current.
Right.
So the fact that Nike's stock has dipped kind of suggests that investors are feeling, maybe a little bit uncertain about their immediate future.
Which makes sense. I mean, considering the article did mention that Nike sales have been down lately, not exactly a ringing endorsement.
True. Their most recent quarter did see a year-over-year decrease in sales, and not just like a small one either. We're talking double-digit percentage drops, which is definitely, something to pay attention to. Now, this is partly due to a challenging retail environment overall, but it also suggests that Nike might be facing some pretty stiff competition and might need to adapt.
So not all sunshine and rainbows for Nike right now. But then why are they being touted as a potential investment opportunity? Is it all about that tempting dividend yield?
Well, that's the million-dollar question, isn't it? While the high yield is definitely eye-catching, it's crucial to look beyond just the numbers. And what's really interesting here is that despite that sales dip, Nike is still profitable. They're not just treading water, they're actively making some strategic moves to kind of right the ship.
Like bringing back former COO Elliott Hill as their new CEO.
Exactly.
The article made it sound like a pretty big deal.
It is significant. Bringing back a seasoned veteran like Hill, somebody with such a deep understanding of the company and how it operates, it signals that Nike is serious about turning things around. And part of their strategy involves going back to basics, refocusing on what made them a global leader in the first place. What do you think that is?
Athletic footwear and apparel.
Exactly. They're streamlining that product portfolio, moving away from, more general lifestyle products and really emphasizing their core strength sports. And they're already seeing some early success with this, with growth in categories like men's fitness, global football, or soccer, as some might call it, and running footwear.
Smart move.
Right.
Sometimes in a really crowded market, you just have to remind people what it is you do best.
Absolutely. And here's where it gets even more interesting. Despite those current challenges, the global athletic wear market is projected to grow significantly in the coming years.
Hold on. How significantly are we talking here? Give me the numbers.
Think almost $300 billion by 2029. That's a massive market. And if Nike can leverage this growth while also regaining that investor confidence, there's definitely a potential there for some serious returns.
Yeah.
It's all about finding the opportunity in the challenge, wouldn't you say?
Absolutely. Yeah, you're right. A company with a proven track record that's making these big strategic shifts in a growing market. I'm starting to see why this is piquing your interest. But before we get too caught up in the excitement of sneakers and sportswear, we have another contender to consider here, ready to switch gears from athletic wear to something a little, maybe a little bit different.
Yeah, let's do it.
Okay.
Let's turn our attention over to the world of telecommunications with a company that's been, kind of quietly building its own compelling case for investors. We're talking about Verizon.
Now, I have to admit, when I think of, exciting investment opportunities, telecom doesn't always spring to mind, It seems a bit, predictable, maybe. What do you think?
On the surface, yeah, maybe. But remember, we're looking for those kind of hidden gems here, the companies that might be undervalued, overlooked by the market. And Verizon, with its current 6.16% dividend yield, the highest it's been in over a decade, certainly has our attention. That's not something to just ignore, right?
Definitely not. And that's not just some random spike, is it?
Yeah,
The article mentioned something about strong subscriber growth as well, right?
exactly. Verizon's been seeing a surge in those highly valuable, what they call postpaid phone customers, the ones who are on contracts.
Right.
This is a key indicator of their ability to, attract and retain customers over the long term. And that's essential for, a telecom giant to be successful.
That makes sense. But to be honest with you, I don't really understand all the telecom industry jargon. What's so special about postpaid customers? Why are they so important?
Oh, that's a good question. Postpaid just simply means customers who pay for their service after they've used it, usually on a monthly contract. So these customers are particularly valuable because they represent, a more stable and predictable revenue stream compared to, let's say, prepaid customers who are paying for their service up front. So a surge in postpaid customers usually translates to, more reliable earnings for a company like Verizon.
Ah, okay. That makes a lot more sense. But what's driving this growth in the first place? Is it just that everyone and their grandma needs a phone these days?
Well, I mean, that's certainly a factor, but, Verizon's not just passively riding the wave of smartphone ubiquity here. They're strategically positioning themselves to capitalize on emerging trends.
Okay.
For instance, all the buzz around the latest AI-powered iPhones.
Yeah.
Verizon's been leveraging that by offering these, really attractive deals and bundles to entice those customers. They're not just selling phones. They're selling the whole package. Right. The phone, the data plan, maybe even some streaming services on top. What do you think of that strategy?
That's clever. So they're not just selling phones, they're saying the whole experience,
Right.
the whole ecosystem, and locking people into contracts, which means more predictable revenue for them. That's savvy.
Precisely. And this kind of bundled approach is smart for several reasons. One, it locks in those customers, making it less likely they're going to switch providers, right?
Right.
And two, it allows Verizon to tap into that growing demand for digital content and services, which is a lucrative market in itself.
Okay. So we've got strategic bundling, a focus on the latest tech. Is there anything else Verizon has up its sleeve that we should know about?
Well, they are known for having, a pretty solid track record, right? I mean, we were talking about a company that's been around forever. Exactly. And one thing that definitely shouldn't be overlooked is Verizon's impressive history of dividend payments. We're talking 40 consecutive years of dividends. That includes all the companies that, merged over time to become the Verizon we know today. That kind of consistency, I think, speaks volumes about their financial stability, right?
Yeah.
And their commitment to returning value to those shareholders, don't you think?
Absolutely. It's like a reassuring nod to investors, like saying, hey, we're in this for the long haul, and we want you to be a part of it.
Exactly. It's all about building that trust and demonstrating that reliability. And for investors who are, seeking that combination of dividends and potential growth, that's a very attractive combination.
Yeah. It's fascinating to see how these two companies, Nike and Verizon, navigating such different landscapes, but both presenting these really compelling cases for investors. What stands out to you the most from all of this?
I think what's really striking to me is how both companies are responding to these shifting tides in their respective industries. Nike is doubling down on its athletic roots, right, to kind of stand out in a crowded market, while Verizon is embracing all these technological advancements and those smart bundling strategies to solidify its position in this ever-evolving world of telecom.
Wait, and let's not forget about that word we keep coming back to, dividends. Both companies offering yields that are significantly higher than their, historical averages, which suggests that maybe, just maybe, there's an opportunity here for investors to buy in at a bit of a discount. What do you make of that?
That's a great point. But remember, those high yields should never be the sole factor in any investment decision, right? It's crucial to look at the whole picture. Think of it like this. Would you buy a car based solely on its fuel efficiency without, considering its safety features, its reliability, how it actually drives?
Right, exactly. Past performance is never a guarantee of future results. Right?
Yeah.
And a high dividend yield doesn't mean much if the company isn't financially sound overall.
Exactly. And, what we've done today is just kind of peel back some of the layers. We've examined the opportunities and the potential challenges facing these two companies. But this is really just the starting point, right?
Yeah. This deep dive has given us a lot to think about. It's a great reminder that even, well-established companies like a Nike or a Verizon, they're constantly evolving. So what's our takeaway for listeners today? What should they be thinking about?
As you delve deeper into these companies, or any others that catch your eye, really, ask yourself, what's really driving these dividend yields? Is it sustainable? Does the company's long-term strategy align with, my own personal investment goals?
Those are the million-dollar questions.
Yes.
And the answers?
Yeah.
Well, those require a bit more digging, a little more research, and a healthy dose of critical thinking, right?
Yeah.
But hey, that's what makes the world of investing so dynamic.
Absolutely. It's a journey of continuous learning and exploration. And hopefully this deep dive has given you a few more tools, a few more insights to kind of navigate that journey with confidence.